What if I told you there was a drone that could fly forever? No batteries, no charging, just unlimited airtime. It wasn't a sci-fi movie idea. It was a real product backed by millions of dollars. Founded by the same person who helped invent the Roomba, this is the story of Sci-Fi Works, later known as Aria Insights, and how it went from the next big thing in drone tech to completely vanishing without a sound, no public failure, no lawsuits, no media coverage, just gone. Welcome to Startup Graveyard, where we dig up the untold stories of startups that didn't make it. Today, we explore a company that tried to keep drones in the air and got grounded instead. In 2008, Helen Greiner, one of the co-founders of Aerobit, set her sights on a new frontier, not robotic vacuums, but flying machines. Her new company, Sci-Fi Works, short for Cyber Physical, was based in Massachusetts. Unlike the flashy consumer drones of DJI or Parrot, Sci-Fi focused on a very niche but powerful idea: a tethered drone, a drone connected to the ground via a thin cable. This cable wasn't just a leash, it was a power source and data line. This meant Sci-Fi's drones could fly indefinitely, hours, days, or even weeks, because they didn't rely on batteries. They could send live high-bandwidth data through the wire, making them ideal for surveillance, inspection, and search and rescue operations. Investors loved the idea. This wasn't just another flying toy. This was a serious surveillance tool. DARPA took notice. So did the U.S. Army, Department of Homeland Security, and major private sector companies. By 2015, Sci-Fi Works had raised over $30 million in funding. Backers included Boeing, UPS, General Catalyst, and others. UPS even tested Sci-Fi's drones for emergency delivery in remote areas. Meanwhile, military agencies explored using them for base security, placing a tethered drone high in the air to monitor movement 24/7 without human involvement. The drones weren't just powerful, they were rugged, compact, and easy to deploy. They didn't fall from the sky like battery-powered ones. They didn't lose signal. They were reliable, like high-tech kites with brains. But as Sci-Fi Works grew, so did the competition. Companies like DJI were releasing battery-powered drones with longer flight times and cheaper price points. Even though Sci-Fi's tethered drones had advantages, they were still limited by the need for a physical cable and required ground setup. They were great for stationary surveillance, but not ideal for mobility or fast deployment, especially as other drones became more user-friendly. And while military contracts helped, Sci-Fi struggled to break into the commercial sector, where tethered drones felt like overkill. Consumers didn't want them. Even many businesses didn't see the appeal compared to cheaper battery options. By 2018, Sci-Fi was facing an identity crisis. In a surprising move, Sci-Fi Works rebranded as Aria Insights in 2018. They pivoted away from being just a drone company. Instead of focusing on hardware, Aria now promised something bigger: AI-powered analytics from drone-gathered data. The new vision: drones were just a means to an end. The real value, they said, was in collecting and interpreting massive datasets from the air, environmental monitoring, disaster response, oil and gas inspection, and more. They hired new leadership. They redesigned their messaging. But one thing stayed the same: their core drone tech still relied on tethered flight. This created a strange mismatch, a company trying to sell futuristic data intelligence, while still anchored to a literal wire on the ground. Then, in March 2019, Aria Insights abruptly ceased operations. No scandal, no fraud, no headlines. Their website went dark. Employees were quietly let go. Investors stopped talking. There was no formal announcement, no acquisition, no public explanation. It was as if the company and its $30 million had just evaporated. So what happened? There are a few likely reasons. First, market fit. Tethered drones are great for very specific applications, but not versatile enough for broader commercial markets. Second, timing. They bet big on military contracts during a time when budgets were shifting and competitors were offering simpler, faster solutions. Third, the pivot to data analytics came too late. They were trying to transform into a software data company without leaving their hardware roots. That confused both investors and customers. Lastly, leadership changes and strategic ambiguity likely led to internal misalignment. In short, they flew too high on a great idea, but got tangled up in their own tether. Aria Insights didn't collapse in flames. It didn't get sued. It didn't lie to investors. It just slowly faded away. And in some ways, that's the most haunting kind of failure. A brilliant founder, a solid idea, a working product, and yet not enough to survive. That's the harsh reality of tech startups. Innovation isn't enough. You also need timing, product market fit, adaptability, and luck. What do you think? Was Aria a victim of market timing, or did they simply lose focus? Drop your thoughts in the comments. And if you want more untold stories of tech that never made it, hit subscribe because the graveyard is full of lessons.